Good evening, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today's July 1st, 2012. Lots to talk about, so let's get started. This is a chart of the SPY, which is the ETF that tracks the S&P 500. All right, so brief history here. We had this up move. We had this consolidation period above this 20 moving average. We went right into this 135.44 level. We came down, and then the consensus was if we gapped into this 50 moving average or below, then and we drove into this 50 moving average, and I would have expected a pullback at least into this 20 moving average. However, what we did do was I did have this line here. If you look back in the previous video, we had this pivot point here on this 50 moving average. I said if we gapped anywhere above this level here, then expect a continuation higher, possibly into this 135.44 level. It did, however, hold intraday, but it ended up going into this double top intraday for the day of Friday on the SPY. Now, a brief history. So what I did was I deleted all of my charts, technical analysis, and I've started all over from scratch. That's something that you have to do whenever you have a big move like this, and you have to reanalyze, and you have to actually look at the weeklies, the dailies, and you have to make sure that everything's falling into place in order to validate this move. Okay, so let me tell you something. These, as you all know, these dotted lines are normally my formulated calculations for determining possible price levels of resistance and support. Now you notice this gray line in my previous videos is the 135.44 was this mathematical calculation. These pink lines, don't really pay too much attention to it right now. It is currently right now in testing. I'm using a percentage instead of actual numbers. It's going to be a percentage of this number here. This calculation is basically the same, but it's using percentages instead of actual numbers. What it's turning out to be is hopefully it'll give me a little bit more accuracy, and it will keep me in the game a little bit more, because I do miss a little bit more trades using these formulas, but when the formulas do hit, it normally hits pretty well, and I do normally get a bounce off of these formulas. So to make a long story short, don't really pay attention to these pink ones now. I've back tested it. They seem to be working okay, but I just want to put that on the back burner, so I'm not going to talk too much about it in the continuations of these videos. Okay, so we had this huge move, right? $3.31 on the SPY on Friday. Look at the volume. The volume is definitely higher than the previous past 5 days, possibly, way higher. About past. Let me just bring up this here. Yeah, so we were higher for the past 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days, which is pretty good volume. It's not, however, don't let it trick you, because it's not. It's 212 million shares traded. Our average is 150 million. Okay. So you just have to think of it this way. I mean, a move such as a gigantic move like this. I mean, if you look at this move, which was a pretty big move, and then we bring this over here, the move was substantially the same. And if you look at the volume wasn't all that great either on this one either. But now here's the thing: when you have a move this big, this huge, from a consolidation period that was supposed to go to the downside, what you're actually seeing is a possible head fake. I don't think, to be honest, that this bullish move is going to last very long. I think this is just institutional game playing right now. We don't have like this huge volume here. This is a move that big. That's the kind of volume I want to see to validate and solidify this move for it to go higher. Will it go higher? Yes, I do believe it goes higher, but not before we get a flat day or a little bit of a pullback, like I've said in my previous videos. And I'm gonna maybe kind of slow down a little bit and explain a little bit more. Whenever you have a huge down move like this, the next day normally you at least get a 25% retracement in a volatile market, maybe 50%, such as this one here. Or you get a flat day meaning we just create like a doji candle like this, and we can kind of consolidate a little bit more before we build pressure to go a little higher. Now, as a chess player, right, we all have to make decisions, or at least I have to make a decision based on what the markets are going to do on Monday, because nobody really knows. So we have to be prepared to see actually what it does do on Monday, and then take action after whatever happens on Monday. I mean, predicting the future is great, using technical analysis, but you can never be 100%. So the best way to do it, instead of predicting the future or trying to predict the future, is let the markets do what it wants. And if it does something that you are waiting for it to do, then you can do an action towards your reaction towards that action will hopefully make me some money. So here's the bottom line. This is what I'm saying. So we had this big move down here, and we had a 25% retracement. We have right now a big move up here. We either get a flat day. This is what I'm thinking for Monday. We either get a flat day, or we get a small pullback back into this 135.44 level. Okay, I do have this 137.09 level here, which is a percentage calculation as a resistance point, and ultimately this 141.36 level. Now, if we do pull back, say through Friday, because next week, remember, next week is going to be low volume because it's a holiday week. So for 4th of July, so a lot of people are taking off, going on trips and whatnot. So a lot of traders will be out of the market. Now, it's not saying that the market can't go down on low volume, but when you do have low volume, you have to give the markets an upside bias because it doesn't give a chance for the markets to sell off because there's not enough people trading in the markets. It can give the institutions more power to prop the markets higher, which is what we've been seeing lately with low volume days. Okay, so if the whole week next week, presumably without any type of bad news or anything like that, if we do have low volume next week, then there is a chance that we go either sidewards or we kind of just float higher. Okay, now if we float higher into this 137.09, then I'll definitely consider taking a short. Let's just say we get there on Friday. If we get there on Friday, then maybe I'll take a short because I'm thinking that the week after, depending, but the week after, I may actually take a short back to this 135.44 level or even lower. Okay, but we'll just have to wait and see what happens on Monday. Now, if in case we actually start consolidating sideways before going higher, I would have to actually check the pattern to see if this 137.09 level would actually hold or not. I mean, if we consolidate like this on Friday, then I don't know if I would actually take a 137.09 level, maybe intraday, but maybe not on a swing trade. Now, if we actually pull back, because we are into a pretty good resistance here after a huge move up, the pullback I don't expect to be lower than this 50 moving average here. We should get some support on that area there. Well, am I actually going to enter the market on a trade? Not right now because it would be chasing. Yes, I do think that we may float higher because next week I need to have an upside bias simply because it's going to be low volume, but I'm not going to base my trades on that. Okay, but I am going to show you some support and resistance levels and some stocks that I was looking at, but I just wanted to give you a generalization of what I see on the SPY. On the SPY chart here. Again, the volume is good, but it doesn't solidify or does not validate this actual huge move up. I mean, this is a pretty big move up. If we actually continue higher without a pullback or a flat day tomorrow, like say we just punch right into this 137.09, then I might actually take a short simply because it was, it's going to be, pretty good resistance point there. But I would be actually going against what I'm saying, which is with low volume it's a little harder to short. So I may actually take it as an intraday short and stay away from the swing trade as far as shorting goes for the next week. Okay, so let's take a quick look at the. Alright, this is a chart of the UUP. Okay, so I did some recalculations here. We are going to get some support at this level here, which we had previous support here. How much support we're going to get is the question. Again, I don't like the use and abuse levels here. I mean, right now we've already hit it. We've hit it again, and then now we're going to hit it again. I mean, this could definitely break through. If it does break down, we're going to get resistance here within the gap fill here, and then we're going to have the gap window, and then we're going to have this nice resistance point here. If we can get to this level here, I really don't see it getting past this 2216 level here, which is a formulated level calculation, and we're also going to have this 200 moving average here. So we're going to have a lot of resistance around this point over here if the dollar can even make it there. We may actually start getting a bounce up into this 20 moving average from this level over here because they did save the dollar, if you can see, and they saved it over and closed it above the 50 moving average. But again, whenever a level is used and abused, such as this level over here, which is this green line here, and then we also have this 50 moving average that was already hit once, this basically means that at any time this dollar could break through. If the dollar breaks down, the dollar is opposite from the markets up, dollar down, and vice versa, right? So we need to keep an eye on the dollar. However, the dollar does look a little bit weaker right now. Again, a pullback is likely. We may actually go into this level here on Monday before heading higher, and then that'll drop the markets. But that is definitely something that we have to watch out for. If anything, I'm going to look for long positions for next week or short positions at the end of next week, if anything. Okay. All right, next up is gold. Again, I did some recalculations here. I do have a level, two calculated levels here, one on percentage and obviously one on a regular number around the 160, the 160.70 level, which the 200 moving average, if comes down at that point, then I'll take a short on gold. Now, Does gold get there? I don't know. It doesn't look too good for gold to get there right now, but let me show you why. We do have this upper trend line here that gold needs to break out of. Gold is currently right into these two moving averages here, which and created this doji candle on higher volume. Now, would I take a short trade on gold based on this doji candle and we have a higher volume? Not really, because we only had one day up. Okay, I mean, this is considered an up day, but it's only a 1 day up. So, I need to see at least 3 consecutive days and then a doji and then on high volume before I'll take a short trade in, say, this two moving averages. I mean, if we had 1 day here and then 1 day here, that would be 3 trades, and then 3 days, and then a doji candle right into these moving averages. And yeah, I'd likely probably take a short trade. But because this was based on only 1 day, probably not. I mean, I would have to at least think that gold would tag this upper trend line here. Now, what gold might do is pull back a little bit before heading higher and breaking through and getting into this 160.71 level. Now, does gold do that? That's a big question we have right now. So a lot of times what I'd like to do is look at the weekly when things look a little bit iffy. Right now, the weekly has a descending triangle here, and then gold could easily break out of this descending triangle, and I also have another calculated level here at 169.75, and then of course you're going to have some resistance at this pivot point here. Will gold get that high? I really don't think so, but we'll see what happens next week. And then this 160.71 level on these moving averages for gold is a pretty good point, resistance point in my opinion. Now, if you look at gold right now, it's come down, it's kind of consolidating, so there's the possibility that we may have another move down. It's kind of a sloppy sloppy candle pattern for gold right now, with all the moving averages, and it's trapped in this triangle, and I have these two mathematically calculated levels here. But it'll be a pretty good bet that the 160 level should have some pretty good resistance on gold. Okay. Alright, so I'm already on 11 minutes and I have a lot of stocks to talk about, so I'm just going to rip right through it, and you guys can pause the videos if you guys want to. Again, this is just not a recommendation, not even a hint or anything like that. I'm just merely telling you what my opinion is and what I might possibly do, based on what I see on these charts. Alright, so this is a chart of Walmart. This is the daily chart. Right now, in the previous videos, I've had different lines on here. Again, I've deleted it and I've had to recalculate because of the massive move that we had today. On Friday. I did have a level here at $70.56. I do think that level is still substantial, and it should still hold pretty well, at least for intraday. Now, it depends on what Walmart does for the next week. If Walmart kind of trades sideways a little bit, then a little bit like this, then the $70.56 level to me is no longer in play. Let me switch to the daily chart. Alright, so that's the $70.56 level right here. Let me delete this line. So if we consolidate a little bit first, I may not take this $70.56 level yet. We do have this trend line here, so we have two upper rising trend lines here. Let me show you how I drew it. From this pivot point here, we have this trend line that comes up here, which is the top trend line, and a lot of times when trend lines break, they like to be revisited. Interestingly enough, I did have a level here which is $72.22. Okay, so that if it tags this level at the same time as it hits this $72.22, then I'll probably take a short. Now, what about this $70.56 level that I've been waiting for so long? Well, because Walmart made such a big move on Friday, there is a possibility that because next week is low volume, that we could actually pierce through this $70.56 level. Again, Walmart is one of the beasts. Okay, it's not only a strong stock, it's actually a beast. I mean, in a down market, Walmart will hardly pull back, and you want to short weak stocks and go long strong stocks. Okay, so would I go long on Walmart? No. If I had gone long on Walmart on this 20 moving average, okay, great, but I'm not gonna go long now simply because it'd be chasing at any time. Walmart could turn over and start coming back down. Okay, but this is just something that I'm looking at right now and something I'll be getting ready for. If it hits the $70.56 level intraday, even after a consolidation happens, then I'll probably take it. But if it for a swing trade, I may have to wait to the 72.22 level. Just because this Walmart has just been, just one of those flyers. Okay. All right, this is a chart of the USO. Okay, I had some calculations here at 31.98. That one was already tagged. All right, so that's done. The next target I have here is $33.25. Now, if this 50 moving average comes down into this 33.25 at the same time, then I'll probably take a short trade on that. Ultimately, I do not see a USO getting past this 37.90 level. Okay. Again, the reason why I'm looking for short trades is because we're still in a downtrend, and nothing's telling me otherwise. So you got to go with the trend, right? Your trend is your friend. If you go against the trend, it's a counter trend trade, and you're taking a higher risk. Okay. All right, this is a chart of ABX. Okay, I have two mathematically calculated levels. That's right around this area here. I have these two moving averages. If price can get into this, to these levels here, then I'll probably take a short. Okay, even though it's going to be low volume next week, I'll probably take a short on ABX because I really like the way ABX looks. Also, in addition to that, ABX is one of the weaker stocks. It's below auto moving averages. We are kind of turning over. The trend is still down on ABX, so taking a short on ABX wouldn't be such a bad idea. Okay. Again, this is just my opinion. All right, this is a chart of Apple. I have new calculated levels. One is 586.58, and then I have 649, and then I have 612.34. Now here's the thing: $600.49. I don't think it gets past here, to be honest. Okay, if it does get past here, I'm currently short on Apple right now, but if it does close above the 649, then I'll probably stop out and wait for the 612 level. Now what I've done was I've redrawn Apple, and what we have here is this rising trend line and this kind of like this rising wedge here. Okay, and I'll show you the weekly right after this. But if we tag this 612.34 level, like this, and you're tagging this upper trend line, then I'm gonna probably sit on it and wait for Apple to break down. Okay, so let's take a quick look at the weekly here. Okay, if you notice on the weekly, we have this down move, and then obviously we have this bearish consolidation pattern, right? And again, the 612 level is right there, and then we could possibly break down. Right now, we're still riding on this 20 moving average. If we can break down, this is why I have this bottom trend line down here. If we can break down and close below this upper rising trend line here on the weekly chart, then I think Apple is done. Okay, that's my opinion. We close but we don't have to confirm. If we just close below here, I'm looking at the 50 moving average as the next target. Okay, that's why I think we'll see what Apple does. Now here's a caveat for Apple. Let me switch back to the daily. The first caveat for Apple is a very strong stock. Okay, again, you want to short the weak stocks and go along the strong stocks. Here's a caveat: Apple has earnings July 24th, 2012. Okay, so close to earnings, Apple normally, the history shows, and Apple normally rallies right before the earnings come out, and history also shows that Apple's earnings are always pretty good. So I'll probably, depending on my position in the trade, if Apple say comes down right into earnings, say over here, maybe into this 200 moving average. I doubt it does that, but let's just say it does, then I'll definitely get out and probably go long, simply because it'll be in pretty good support. Okay, but that's my Apple play right now. Or this is the daily chart of the AXP, which is American Express. Okay, I like this chart pretty much. I kind of like this chart, but again, this is another strong stock. It's actually a beast in my opinion, because when the markets go down, this thing hardly. I mean, it's just been going up when the market's been going down. Okay, so right now we have the 75% Fibonacci fib level here. We also have this mathematically calculated level, which is at $59.32. We get there, I may consider actually taking a short trade on the AXP. Meaning, say we get there on Friday, then I'll probably take a short trade on AXP, and I'll probably stop out with any close above the $60.78 level, which is only about a buck higher. Okay. All right, I really like JGC for a short. Right here is about the $45 level. We also have this gap window and this 200 moving average coming down. The JGC is also a stock in weakness. It's below, the 200 moving average, etc. We're also at this 50% Fibonacci level. So around this level here, in my opinion, might be a good short on JGC. And if the markets go higher, I really don't think JGC is gonna hurt you too bad, because it is a stock currently right now in weakness. Again, everything I'm talking about is considered short term. Okay, so we also have this $38 level over here, which coincides with the 200 moving average and the Fibonacci 382 level. I really like that level, but let me show you something else on the FCX. On the FCX, we have this level here, which is about the 36.76 level, or the $36 range, right around here. Okay, on the weekly chart, you can see it a little better. We have this descending trend line over here. Okay, and then we have these two moving averages kissing. Let me just zoom in over here. We have these two moving averages kissing together over here. We have the 50 moving average sloping down. This stock is definitely a stock in weakness, and it's something that I definitely will look forward to shorting. We have this down move here, and then we're consolidating. So what I'm looking for, because the markets could be bullish next week, I'm looking for a push into this $36 level before shorting it for it coming down. So actually, this is one of my favorite, one of my more favorite stocks, simply because I'm going to short. It's in the direction of the trend. It's a stock in weakness below all the moving averages, and there's a lot of resistance around this area here. So if I short this area and the markets go higher, it shouldn't hurt me too much. Okay. So this is a chart of RIO, Rio Tinto. Okay, let me kind of just zoom in over here. I have a level here at $50.44 for a short. What I really like is this level up here, which is the 55.45 level. In addition to that, the only problem I have with this is it's gotta push through all these moving averages. So actually, in reality, well, this is the weekly. In reality, I really like this $50.44. Let me show you why. This is a daily chart of the Rio Tinto, and we have this $50.44 level. If it can get into this level over here, then I may consider taking a short, because we have this upper trend line over here, plus this formulated level here, and the 200 moving average is not too far away. Any close above the 200 moving average is going to be my stop, and then the next time I short will be all the way up here, which is the 618 on the Fibonacci retracement level. And I also have two mathematically calculated levels up here that are kind of conjoined within each other, giving me that much more resistance. So it really depends on how the upside bias or the upside is next week, if any. And if there is upside next week and it ends up being towards the end of the week and it hits one of these levels, is when I probably take the short. This is a chart of SEAG STX. Okay, I had two mathematically calculated levels here, which is 24.88, which means we could actually get a pullback already. Okay, but that remains to be seen. Again, I'm testing these pink lines here. They seem pretty valid, but I'm not going to bet money on it. We have this move down here, over here. We're consolidating for another move lower. We do have this 200 moving average creeping up higher, and we also have earnings coming up. And I do not trade earnings, because you just don't know what's going to happen. Now the earnings come out on the 17th of July, so we just want to be I just want to be cautious on Seagate. If Seagate can get up into this 50 moving average or into this 26.18, say tomorrow, then yeah, maybe I'll take a short, because there's going to be a lot of resistance right in this area anyway. And then I'll probably get out right before earnings. But if I'm considerably in the money before earnings, then I may actually take a trade. But I would have to be at least 10% in the money before I hold it over the earnings period. But I just need some buffer in case it goes against me. Okay. Another reason why I like the STX is, if you look at this $26.18 level, not only was it a good level on the daily, but it is also a good level on the weekly. You see this 20 moving average coming over here. If we can get into this 20 moving average on the 26.18, then I'll probably take a short trade, and it'll be a very quick short trade. In my opinion, the stock is not in strength or not a beast, but it's definitely something to consider, that on the weekly it is above the 50 and the 200 moving average. So basically right now the price is in between all the moving averages. It's either going to pop higher, or it's going to pop lower. If I had to guess, because of this consolidation pattern, I would expect Seagate to pop lower. Okay, but again, 26.18 is probably my target. I'm probably going to put an alert here, just so I'm notified if in case it reaches that price. I kind of like that on the Seagate. Alright, this is a chart of Bed Bath & Beyond. I kind of like this chart as well. I have a level here at 65.01 and 66.35. We also have these moving averages coming down. However, we do have this 200 moving average right there. Now, what is this green line down here? Let me show you. Alright, this is a weekly chart of Bed Bath & Beyond. And you see this trend line up here? It actually broke down from this trend line, which kind of shows me some weakness here, but they saved it. They were able to close it above this trend line, but it wasn't able to close above this 50 moving average before the week closed. Okay, so this is why I kind of like these levels. 66.35, if it can get there, is a 20 moving average. We had this huge down candle over here. This is already based on earnings, so earnings is already out. I don't need to worry about earnings anymore. So let's switch back to the daily. So this basically means if we can get into the 66.35 level, we also have this pivot point here, which is going to have some pretty good resistance. Okay, and this level also here is going to have some pretty good resistance at 65.01. To be safe, I would take the 66.35 trade as a swing short. And that's basically if we can even get there by the end of next week, and the 20 moving average should be coming down there at the same time. Okay. All right, last but not least is CMG. CMG is just something that I'm going to keep an eye on. This is the daily chart, and this is a nice trend line in my opinion. This trend line has been used and abused, so this is this 200 moving average. Basically, if we close below this 200 moving average here, then I'll probably continue with a short. It wouldn't be considered a chase. But if say we break down from this 20 from this trend line over here, and we come down. I'm gonna wait, however, for it to retest this trend line first, before shorting it and coming down here. And the caveat again, earnings is coming up, and this is on the 17th as well. So it's just something that we need to, that I need to keep an eye on. CMG right now is one of the stronger stocks. So again, you want to short weak stocks and go long the strong stocks. Okay, so that's pretty much it. This is your weekend update. I hope um, everything looks good. Oh, and one more thing I wanted to show you here. Why do I think that this is a head fake, or this rally might be short-lived? Short-lived meaning, a week and a half, maybe 2 weeks tops. Is because not only do we not get substantial amount of volume, but we also had stocks like JP Morgan, which is the leader in the financial institution for you know for the financial sector. Okay, so JP Morgan in a huge market like $3.31. I mean, come on, that's huge. Okay, down 15 cents. Down 15 cents. JP Morgan just could not get a bid. All right, it went right into this 50 moving average and just pulled right back down, right into this 382 level, just the same as well. So is this 20 moving average going to hold? We'll see. The JP Morgan, our earnings is going to come up shortly. They also lost $9 billion or something like that. This is why I think the markets probably aren't going to last very long in this uptrend, okay, or in this bullish sentiment. Now, in addition to, so we've got a couple of things. So we got volume, we got JPM that's lower, which is the leading stock of the financial sector, and we also got CNBC saying, "Oh, we're in a bullish market now. We're gonna, go for the sky and make new highs." When you start seeing that, when you start seeing institutions releasing news such as that, then the expectation is to be a contrarian and to break down and to break it back down. Just like recently, Goldman Sachs saying that the SPY is going to go down to 121 or something like that, and then look, we get this huge pop. Again, and I just want to make this clear, institutions don't want you to make money because they need to make money. And the way they make money is by taking it from you. So if you do what they say, obviously they're gonna be taking money from you. I mean, I don't know how much more common sense that is. I mean, Goldman Sachs, JP Morgan, they got billions of dollars to put in the market, right? So now they own, say, thousands of shares of, say, something like Apple. Not the normal retail trader is not going to be able to afford to buy 1,000 shares of Apple, right? So what's going to happen? They're going to need to release these news, upgrade Apple, upgrade this, prop the markets higher, do some manipulation here, so everybody gets bullish, so they can sell to these people who are bullish, right? They need, in order for it to have a buyer, you need a seller, and in order to sell, you need to have a buyer. Basically the same thing. If any of these institutions are holding these stocks, they need to sell it to somebody, and they need to sell it to somebody fast, and they can't sell it to anybody fast because it's such an expensive stock. And so what needs to happen is they need to release these news so people just jump in, right, thinking Apple is going to go to 700 or even $1,000 a share. I'm sure all of you have heard that. And then what are they doing? They're selling it to you. So Goldman Sachs is saying that the SPY is going to go down to like 121 or something ridiculous like that, which is true, but then that made me nervous, which is what I mentioned in the other videos. You want to go opposite of what institutions like that are saying. Again, same thing now. The institutions, I'm sorry, the CNBC, the news is saying, be bullish, buy, right? Now all you have to do is wait for JP Morgan or Goldman Sachs to say, oh no, just kidding, the SPY is going to go up to 137 or 140, and then when they say that, I give it a day or two before the markets start pulling back because they're going to be dumping their shares onto the retail trader. And that's all the time we have now. This is your 7-minute market update. I hope this helped you all. If not, I'm just letting you know what I'm seeing on the charts and what I'll probably do. Again, it's going to be a day-by-day thing, and short-term trading is what I do. So God bless to you all. Thank you for watching, and I hope to see you in the next video.